Hey, happy weekend, everyone. It is Sunday, February 27th, 2022, a little after 1 p.m. New York City time. And I hope everybody's having a good weekend. There's a lot of really crazy stuff going on in the world, and uh, most of it's not good. So I hope you're staying safe and trying to enjoy your life the best you can. And sorry I haven't made a video in a while. Per usual, just get busy doing other things and trading. But anyways, enough of that. Purpose of this video, guys, is just to talk about kind of looking at supply and demand levels and looking at longer term charts to kind of get areas of opportunity on a longer term chart, and then potentially looking at smaller time frames to enter these areas of opportunity. And so what this really involves, guys, is going out to, like, say, a daily or a weekly chart. I don't really go much over the weekly, but I like looking at the daily and the weekly chart to kind of establish these big ranges. Now, again, a range on a weekly chart or even a daily chart is going to equate to a lot of price action on a smaller time frame. So don't let that deter you from looking at stuff like this. So you can go through pretty much any pair and do this. Some are better than others, and quite frankly, if I can't kind of quickly define those areas on the weekly chart or the daily chart, then I will just kind of ignore that pair anyways. So I'm just going to go through a few here and just talk about some of this stuff. And this is really good opportunity if you are more of a position trader. If you don't have a lot of time to look at the markets, you can actually just trade off of these levels alone and not deal with anything in the middle, in between. But if you have the time to look and do more of day to swing trading, then this still gives you the perspective on what direction you should be looking for on the shorter time frames. Okay, so, and I'll explain that as we go here. So let's just take this one for example. This is the Kiwi dollar. This is a weekly chart of the Kiwi dollar. Okay, and you can see here I've kind of defined a trading range here of recent price action. And, I'm just kind of eyeballing this, and sometimes I like to zoom out a little bit and try to get this perspective. And so these are the two lines I kind of, that I stuck on here. These two horizontal lines that kind of define this current range. And again, there's a lot of other stuff going on, but this is a weekly chart. So between these two lines is 940 pips. So there's certainly a lot of room to play in between here. Okay, so if you look where price, recently bounced off of this lower area and now appears to be going higher. Now, until this tells me otherwise, I'm going to, assume that these areas will be respected. Okay. Now, look, there's always room that your levels might not be right. For instance, perhaps the level is here instead. Okay, instead of being this one, it could be down here. So I will be looking for opportunities, within these ranges, though. Okay, so if this is correct, then then this tells me this price probably will be going up, and I'll be looking for short-term opportunities on the lower time frames on pullbacks. There was one right here. Price had gone up, retraced, and now going back up again. Okay, so you could handle this two ways, guys. You could either, like I said, if you really don't have the time and you just don't want to really look at charts except for maybe once a day or a couple of times a week even, then these are great areas to go through and mark off these horizontal areas on the long time frame and just look for when price gets back to these areas, because these are going to be really excellent areas to enter kind of longer term trades. Okay, but like I said, if you want to be in the market a little bit more often, you have time to look, then once you define where the price is inside of these ranges, then you can go to your shorter time frame and look for entries on, say, a 30-minute or a 1-hour chart. All right, so let's maybe go to a couple more here. And we'll zoom out here. I'm just trying to pick some of these here. Okay, so here is the Aussie yen weekly chart, and again you can see the two orange lines is kind of where I'm defining this range right now, and you know, I'm looking at this price to continue to go up and get back up into this area. So again, on a shorter time frame, I'll be looking for entries. I have this one marked off as maybe a potential area of interest for price to get back and then continue an uptrend. But you can see I've defined it on the longer time frame. Okay, let's just pick a couple other ones here. Okay, so this is the weekly chart of the euro pound, and you can see I have a floor here. This one was marked out as a previous demand area, which obviously it doesn't, this was a long time ago. So actually, while we're talking here, I'll move this one back up. Let's just say somewhere about here. So now you can see recently we came down here and we tagged the bottom end of this weekly zone right down here, and we do appear to be going up again. If we go to a shorter time frame, here's that line. You can see we came right to it and now heading back up. So I'll be looking to establish long positions on the euro pound going forward, just based on this pattern alone. Okay, now we have a defined area here that price is moving in between. It came back down and now it's heading back up. So this is one, you know, where again, now you're not going to necessarily wait for this now to get all the way back up here before you trade. This is a weekly chart. I mean, this could take a year for it to get back up here or more. So so you don't want to waste those opportunities. But this is a great area because you look how close it is to this support area right now, or this demand area now. So now, you know, you can definitely try to look for opportunities on a shorter time frame. You don't want to just enter in after a big rally up. You want to wait for pullbacks and then enter. But I think this is probably one that you might be able to just enter and just leave it. Once you do get a good entry, and just leave it. And, you know, it could be a long-term trade you just sit on. Okay? Let's look at a couple of other ones. So here is the pound Aussie. And you can see the pound Aussie, you know, if these two orange lines are accurate, we're right in the middle now. Now we've been going down here for quite a while. You can see this big downtrend, and on a shorter time frame, this has been a pretty impressive move to the downside. Okay, but again, in bigger perspective, you know, we came down to this lower area and we bounced again, and we appear to be heading, you know, back up on the longer time frame. So if you didn't trade this downtrend, and again, it's not that you couldn't trade this in between, but if you look at this from just the perspective of the longer term time frame, this could be an opportunity, you know, potentially setting up for a long position here. Okay, and so I'll be looking for price to come down somewhere into this area right here and see what happens from there to potentially bounce. Now, if it blows right through there, you know, there's another area maybe right here, but somewhere in between here, I'll be looking potentially for this to turn and go back up and head back up towards this line, because the last move it made was down, you know, touching it from the downside. The pound yen, I'll skip. It's a little bit more complicated. Well, I guess I can show you. So yeah, so I'll show you this. So here's pound yen on the weekly chart, and this is the area I've defined on the weekly chart. And this was a nice supply area back here where price kind of like based out and then fell, and then you can see we've come back to it. And so now we're back up here again, and see we did move away. Now obviously on the shorter time frame, you can say, well, you kind of already missed it because here was the opportunity really up here. But there are going to be opportunities to still short this. So these are kind of the couple areas I'm looking for price to rally back up into. You know, again, potentially up into this area. If not, then maybe up here to have this come back down. My preferred area is here because we've already been back here. We came down, came back. So this is, you know, maybe an area right in here to consider a short position depending on the price action. And you can see on the longer time frame, price does suggest a move to the downside. Okay, just again based on where it is in this big weekly range. Okay, we're at the top of that range into this supply area, And so, you know, my bias, and until it tells me otherwise, is back down. Now, if we end up rallying up and close up above these highs, then that voids it, and that's fine. And now, you know, we'll shift the momentum to the upside. But until it does that, then the longer term view tells you that this is still heading down. So here's the pound versus the dollar weekly. Again, I'm looking for shorts here. This is the range I've created. And then so the last touch was up here. And so we're kind of, you know, just starting this move now. We have the correction here. And, you know, potentially looking for shorting opportunities here on a shorter time frame. This is the hourly chart. I do expect to see price continue to rally back up here. You know, this is my first zone up in here. There's a little supply area maybe right here, which also corresponds with this area. So I expect to see price kind of rally back maybe into somewhere up here and then look to short this. But again, I'm using the longer term time frame as a general perspective about what is the overall direction in this pair right now. And to me, this is down, okay, until it tells me otherwise. So the pound Swiss is not as good. That range is really narrow, so we'll just skip. That's not one I'm really keeping much of an eye on. Let's look at pound Kiwi. I'm not sure. Okay, so pound Kiwi, here's your range in here. And you can see we came right up into this area right here and bounced right off it. And we had this strong push down for the last, basically the last month or so. You can see this huge move down. And, you know, if you didn't already get this, again, I think as long as you keep looking for pullbacks into these previous areas, that you can continue to look for downward price action back down towards these lows, you know, at least back down to this area in here. Okay. Euro Kiwi, again, overall, I'd say I'm bearish on the Euro Kiwi. Again, we came off of this range right here, and now we're heading down. We have this nice big correction back to the upside, and so I do think that this will continue down. I'll be looking for shorting opportunities in the Euro Kiwi, and we can just keep doing this. So here's the pound, the Kiwi Canadian. And we had this range here. It looks like we've bounced off of it. And let's zoom out a little bit on this one. And you can kind of see the range in here. So this is not one of my favorite pairs to trade. It's a pretty low volume pair, but it is something to at least look at. It's interesting to see that this might go up because if you want to just talk about fundamentals, the Canadian dollar has been very strong the last couple of weeks because of oil prices, and with the Ukrainian conflict, that only drives up energy prices, which should help the Canadian dollar. But with this suggesting an uptrend, that means either the CAD will weaken or the Kiwi will strengthen stronger than the Canadian dollar. So not really one of my favorite pairs, but overall, if you want to talk about a fundamental bias, you know, this is probably one that's a little bit more tricky. But anyways, still, if you're going just by the price action, then this does suggest an upward bias. And this is the Aussie Canadian. Not really a very good defined range here on the weekly, so that's not really one I'm looking at right now. I do have these trend lines in here, but my bias on this, you know, honestly is maybe a little bit to the downside, but it's not really one I'm watching right now. And this is one of these exotic pairs. This is the dollar Norwegian krona. Not really a pair many people trade. I trade it once in a while. It does move really well when the dollar is moving. I'm not trading it for the Norwegian currency, but it is a good one to trade against the dollar. And you know, clearly there's an opportunity here for shorting again on the weekly time frame. We're in these ranges. Looks like we're heading down here on this particular pair. So, all right, and you know, don't get fooled by the spread on it. Well, of course the market's closed right now. That's why these spreads are so high. But normally the spread on this pair is about 40, and you're like, geez, 40 pip spread. But a 40 pip spread in here is really, it's not a lot. The per pip value is very low on this pair, so you can't really be fooled by that spread. It's no worse than trading a spread on a regular minor pair. Okay, so I don't, don't get fooled by these numbers. So it's really not that bad. So it doesn't have a ton of liquidity, so you do tend to get some big spikes at market changeover. So you do have to give these breathing room. You can have big price spikes and stop hunts going on at, like, market changeover periods, market open, market close. So that is a little bit of a drawback, but that can happen even on things like the pound kiwi and the euro kiwi that don't have as much liquidity. You can get those big stop out spikes that happen at low volume times of the day, low liquidity times of the day, and this definitely can happen on this pair. But during normal market open market hours, it moves pretty normally and pretty fairly, and you can make some good pips if you catch a move here. So anyway, so that's that one, and yeah, I mean that's really what I wanted to show you guys. Again, so what you could do with these, like I said, if you define these areas, okay, and I like using the weekly chart. That you can do it on the daily too if you zoom out a little bit, but the weekly I think gives you an even bigger perspective. But let's say this is the proper zone between these two orange lines. So if you're going through your chart and you define these areas and you think you're pretty confident on them, and you see price approaching one of these areas, then that is definitely an area you want to go to a shorter time frame and wait for price to get down there. Don't over jump it, because again, this looks really close on a weekly chart. There still could be a lot of room here to this line on a short time frame. But go down to your short time frame, like your hourly chart. Wait for price to get down right near this line, and then look for kind of bullish price action to re-enter. And you could just do that on any pair, okay? But again, because this is a long-term time frame, you're just not going to get these opportunities very often. Most of the time, you're going to find they're in between these ranges when you just set these up initially. And what are you going to do? You're going to sit there and wait for it to come back. I mean, from here, when it reached here to come back down to this level, is 43 candles. So that's that's 10 weeks short of a year. So this is about it took about 10 months for it to go from here to here. Okay, so you're gonna not trade for 10 months. You know what I'm saying? So that's why I'm like, you can definitely look for these opportunities. If you see one setting up that's golden, write that down and keep a very close eye on it on the shorter time frame for an entry point. But if you're seeing where it's in between, then your opportunity is to go to a shorter time frame and look for pullbacks in the direction that you think it's going. And for instance, in here, if you think this is it came down to here, so the next move is to go back up into this area, then you'll be looking for long opportunities on the shorter time frame to enter this trend back, continuing up, if that's what it ends up doing. And again, that has to be your decision and your analysis to about when and if you want to enter those. Okay, I'm not telling you to do that, because this could just go and fall right through the floor here. But I'm telling you, based on where it's been and based on these ranges, that's what it suggests. And some of these are better than others. Some of them are just really hard to pick out. And if that's the case, if I can't quickly define those areas, then I just don't trade it. That's all. Here's the Euro Canadian. So again, the upper range is pretty clear. The lower range is probably about where I have this line, although potentially, it could be way down here as well. So this is, you have to sometimes just be a little bit flexible to see, what price ends up doing. If it's not really well defined, then, put the levels on there and just wait and see what happens. But some of them are really well defined, kind of like this one. And so here, again, Euro Aussie, I'm looking for price to come down a little bit more. I think it'll fall off a little bit more back towards these lows, and then potentially look for an area of opportunity to take this long. In the meantime, I could, look to take short positions as it heads back down towards this area. This is that line on the weekly time frame. You can see we're not really that far away from it at this point. So, although it is still fairly far, because I just scrunched up the chart, it's still 240 pips away. So, still opportunities to take some short positions heading down towards that area potentially. So, all right. So that's it, guys. Again, just kind of look for those long-term supply and demand areas. And you know, really what this is based on, guys, is that you've probably heard the statistic that about 75% of the time, and I don't know if this is an accurate number, but it's relatively accurate, that most of the time, whatever percentage you want to put on it, most of the time currency pairs are moving pretty much sideways. They're consolidating most of the time. But of course, a consolidation on one time frame could be a very active trend on a shorter time frame. But that's why I like to go on that basis that on the long time frame, you're going to have institutions buying and selling off of long-term areas, because they have to use those longer-term time frames to trade in, because it's just the volume that they use. And so this takes that into account. So you go out to that weekly time frame or daily maybe. Try to really define those high and low areas the best you can. And if you have to put multiple lines, then I wouldn't put more than one or two lines at either the highs or the lows, because it's just going to get too confusing. If you have to put more than that, then it's probably not clear, and you probably just not even trade that pair. Just move on to something else, which is why I have so many pairs open, because there are some that I just don't bother with because it's not clear to me, and I'm not gonna try to force anything. So, but go out to that higher time frame, try to define that. And then if you notice price coming into one of those areas as you're doing that, then that's a golden one you need to make a note of and keep a very close eye on for a movement off that area. If, on the other hand, the price is in between those two areas, which is more likely the case, then your opportunity is to go to a shorter time frame and wait for entries in the direction of that longer term time frame to get back in. And things are obviously going to be a lot more exaggerated on the short time frame. So if on the long time frame it's pointing in a bullish direction, and you go to the 1 hour chart, let's say, and the price has been going down for a long time, you're like, geez, that's not in an uptrend. Just keep in perspective what you're looking at. You're looking at a weekly versus an hourly time frame. It's a completely different area, and that's fine. Use that downtrend on the hourly chart to kind of set you up for an entry to get back into the longer term trend off the weekly chart. Okay, so just an idea, guys, something to do, just kind of taking advantage of the higher time frame ranges and overall direction, trading off of those areas on the higher time frame when they hit them, and then in between looking for trades on the shorter time frame that are in the direction of that longer time frame motion or movement. Okay, so I hope that's helpful, guys. Just something else to look at, and you don't need any indicators for this at all. I mean, I have my momentum indicator. I do use this for some divergence when it gets to these areas, but honestly, I don't. If I didn't have it, I'd be okay with that. But you can do it without indicators, without moving averages, just basically using lines just to mark off these supply and demand ranges on your higher time frame. I use one color for that. And then if I'm looking for areas inside of there, I'll use a different color just so I don't get confused. So, and that's all I do. And I've been doing that now for a while as one of my strategies, and it's worked pretty well. You're not going to get a ton of opportunities, again, if you're looking on these longer time frames only. But, hey, you may not get as many, but the ones you do get probably are ones you can hold on to for a long time. And they probably, in the end, will be very profitable. You just have to be patient with them. Versus the smaller time frames, that's fine if you want to do that. Just keep in mind what that weekly direction is telling you before you pick a direction on the short time frame. So, all right. So any questions, guys, leave them down below. Comments, anything else, let me know. And hit that like button. Subscribe to the channel if you just find me for the first time. And I will talk to everybody soon. Hope you have a good week coming up, and I'll try to get back in here a little sooner and talk about some entries based on what we just went over as they appear. Okay? All right, guys, have a good rest of your weekend. Talk to you all soon.